So hey guys, welcome back to the Fibonacci Swings again. This side Upakar and welcome you all back again after 2 months of the time. I was little sort of busy, and again there are so many things in my life going on, and yeah, the price action was too much shitty. It's like 2 months back. Later I am back again, so I welcome you all with this again this new analysis, top round analysis for the Euro USD, and yeah, that's my favorite pair to trade, as you all know. Let's get into the time frames and see what's going on. So this was a monthly time frame of the Euro USD, and we are in the fair value cap right over here. And now, what we are anticipating here is like we have 5 days and 8 hours to close the monthly time frame candle, and we can see the sweep of liquidity. And now right over it's going above to the external liquidity, which is right over here. If you see the video, we can see that we have done this impulsive move and then a consolidation right over here. Then this was a high, then we got in this range. If we see in the premium and discount area, we realize that yeah, this fair value gap was in a discount and market had reacted to it, so liquidating all these buyers right over here. Now if we see the data of like uh, economic data, so commercial banks are longing the euro. So this is how the situation is right over going on, and it made a low of 0.01, which was actually estimated by me. And I think I remember in November I give you like this long for this Euro USD, and which was actually success and fail. You can see that because we got a great reaction about 2 to 300 pips in that moment, but my target was 2000 pips, which was not possible. But rest of now we are in the here monthly time frame, we see a reaction from this area, which is the low of this monthly candle, sweeping of this low, and now we have turned this candle into green candle, which is 5 days and 8 hours again. Then it will just remain what else the output should be. Now let's turn into the weekly time frame and see how the weekly is going on. In the weekly time frame, we can see that here we got another sweep in the liquidity right over here on the first week of this was I think second week of January. We got a sweep on the first week of candle, so that make a yearly week, I guess. So it was again a yearly open also. So it was also a yearly open. So this week was successful. So yearly open was right over here, 30 December. So this was the yearly open. So I will just mark out here. This is the yearly open. So yeah, now I just quickly get you. Okay, now we are here in the weekly zone or weekly time frame. On the weekly time frame, we can see the sweep of liquidity closing the candle. Then the next candle closed expansion. This was the whole expansion, which actually closed right above these highs. So this making a CSID in the shorter time frame, but I will not consider it as of now. Let's go to the daily time frame and let's see how the situation going on. Okay, so this is a daily time frame, and this is a 1 January candle. Where is 1 January? 2. This is okay. So the yearly open is here, right over here. Sorry, this is the yearly open. This is the yearly open. It goes up, you manipulate. Then sorry, it go accumulate here, manipulate down, and now it's going for distribution. So let's see if there is any sort of PDRA available for here. So we got a CSID in daily time frame right over here. If we see, this is the CSID in the daily time frame, and which makes high probability because we have seen a shifting of structures in the Euro USD. Now we are turned bullish up here. This is an impulse shift that, considering the way can now can go higher. If we measure all these, so what is the potential POI for the next weeks to target? So this is a fair value gap present in the discount PDRA. This is a fair value gap. This is our point of interest as of now, and this is also in a discount array, making it high probability. So this is the area for longs in the daily time frame. If we get a price right over here, and we have next week full of newses, and there is also FOMC meeting in the upcoming days. I can anticipate price to go higher because we have liquidity right over here, liquidity right over here. So it will just sweep out all this liquidity, and then we can push higher. This is really open. Our stop loss would be right over in these areas. And if we measure it, what is the potential good area for the take profit. So let's measure it again. So this is a standard deviation which I am using. So this is a manipulation move right over here, and I just want to continue where it can find. This is right over here. Uh, let's move the standard deviations. It's not looking at it now, but yeah, we can see up liquidities, which is right over here 1.09. This can really give a nice move, and if we see a standard deviation, this is 2.5. 2.5 is here, and we see two standard deviation which is on the top of this. So if we get an entry right over in this fair value gap, we can anticipate higher. Our stop loss will be the low, and it will give us how many pips. Let's measure it. So it will likely to give us roughly 500 to 600 pips. Yeah, 595 pips. That's very good risk to reward ratio. And yeah, this is the overall my bias for the Euro USD for this week, and it can take longer. I think about February 1st and 2nd week also. We will see that how it anticipate and price go higher. So we have now liquidated all these highs. Now we can anticipate for this fair value gap to uh, push price higher, and our stop loss would be right at this area. If it sweep out this liquidity, and there is no problem. But yeah, our entry should be right in this area after some sort of confirmation in the 1 hour time frame. For example, CSID. CSID is nothing but just an impulsive shift right over the opposite candle closing over the candle, which is right over here. You can watch it here. So yeah, this is overall my bias, and we will see how the price react and how the price goes into the future. So this is all of the update, and today is 26th of January, and see you inshallah next month. Bye bye.